But if you're playing with options, then you should pay attention. So when you buy a call, you have the premium, right? And in the premium, you have something called theta decay. And that's basically, if you're buying an option that's going to expire in 3 days, 7 days, a month, doesn't matter. There's a certain amount of decay every day that's built into that premium, where it's basically fighting against you. And if you're trying to shoot up, it's trying to pull you down. And so there's an alternate strategy. So in this case, if we think the market's going to pop up, one of the things you could do is look into a short put spread. And so what you're doing there is you're actually selling puts. And rather than selling naked puts, what you're doing is you're selling puts at, let's say, 370, 370, let's say. And you're buying some protection on those puts at 365. And what you're doing there is then when the market goes up, as the market goes up, rather than the premium fighting against you and pulling you down, the premium actually lifts your trade up. And that's what you want, is basically you're going and you're selling those puts out. You're selling those puts to people who are afraid right here. And so they're overpaying for premium. And then when the market turns and starts going up, that premium quickly evaporates. And so not only do you get the theta, but that shift in momentum really reprices those options in the other direction. So you collect that premium really quick. So let's look at how you would put a short put spread into TD Ameritrade. What that looks like is, we take a chain that's 3 days to expiration, so this is coming Wednesday, and we want to grab one with a little bit of meat. And we can see that the market's been moving like 1% a day, so if it's going to go in our favor, then grabbing a little meat here should be fine. And so I'm going to do a $5 spread. Okay, so I'm selling the 370 and I'm buying the 365. And then you just hit done. And so this is pretty close to the midpoint, which is 250. So it's a $5 spread. If you're close to 250, you're doing pretty good. So what we're going to do here is put that in and look at the risk profile. All right, now let's analyze what the profit loss looks like here. So we've put in the trade, it expires in 3 days, and you see there's 2 lines here. There's a purple line and an aqua line here. The aqua line represents the max loss and the max gain in 3 days on Wednesday. And the purple line represents Monday, the 26th, as it stands. And what we can do here is we can see day by day what our profit loss would look like. So here's the 26th, here's the 27th. You see the line kind of ticked a little. Here's the 28th, ticked a little more. And the 29th is expiration, which matches the aqua line. So the cool thing about this trade is on Monday, if the trade starts going against us, see, we could actually have it go against us by several dollars on the S&P 500, a percent, and we'd only be down like $500. But that's Monday. So let's say the trade starts going with us though, and we're like, oh wow, this is a powerful rebound in the market. We're seeing the MACD and everything turn around. And we think that, by Wednesday we're going to have like maybe 2 or 3 days in a row that are positive. Now you've de-risked the trade considerably, and it's going in your direction. And every day it's going to go in your direction at a faster velocity. And since it's such a short-dated put spread, you'll find out whether you're right or not within a couple days. So this is how you don't trade with the herd. This is how you get theta to trade with you rather than against you. Pull your trade up rather than pull your trade down. And it gives you an opportunity, later on Monday, early on Tuesday, to still exit the trade with a minimal loss, a defined trade, right? So you're not risking like infinite money. That's never a good idea. And you're not trading with the herd. Like I said, you're allowing the fear that other people are placing into those puts to be your profit on a turnaround. All right, there you go. That's how you do a short put spread. That's how you make more money. with Marty. Please like and subscribe. See you next time.